What is going on, investors? Hopefully, you guys had a great day out there. Time to talk about Shopify Incorporated, ticker symbol SHOP. Over the last year, stock's up 84%. Year to date, though, kind of flat, up only 2%, but that probably doesn't include today's massive 10% pop after Shopify reported Q1 earnings that gave investors just that tingly feeling inside. The stock's up 10% based on GMV, which is gross merchandise value, which essentially, we'll talk about this when we get over to the financials with Shopify. So they have two different kind of ways to get revenue. They charge you a monthly fee if you have a Shopify store, but then they also skim off the top of your sales as they process the payments and those types of things. Both ways is very profitable. In fact, for Shopify, they turned to a income from operations, and that is getting investors excited. The other thing that should get investors excited is kind of the formation that this thing is working on the stock chart. So we'll talk about that as well. Let's just jump right into the numbers. We got our 3 months ended here with Shopify. March of last year, we've got subscription solutions, which is essentially the $30 a month or so that you pay for Shopify. We went from 187. This is in United States dollars. Okay. I was making sure this is not Canadian dollars because I believe this is a Canadian company, all the way up to $320 million. So we've got merchant solutions that went from 282 to 667, showing you two things. Number one, they're adding more stores to the platform, more people opening up a Shopify shop. And on top of that, this merchant solutions is showing that more products are being sold on Shopify stores. So it's all good, right? So you got $988 million, just shy of $1 billion in terms of revenue. That appears to be almost double or even more than double where we were last year. That is explosive growth. You continue that type of growth, and this stock is probably going to continue to go higher. Now, cost of revenues. Notice this subscription solution. It's basically like a software platform. It's got software-like margins. We spent $58 to make this $320. Whew, those are beautiful margins. Merchant solutions, they do pretty well here, okay? They spend $371 to make this $667. That means we spend we'll call that $430 million to make this 988. So you take 988 minus 429, you get $558.7 million in gross profit. Okay, last year we're sitting at 256. So we more than doubled just in the last year in terms of gross profit. Not full story though. We got sales and marketing, R&D, general administrative, and you got some transaction and some loan losses. It looks like maybe they lend money to small businesses or something like that, and you take some losses there, but it's an insignificant part of these expenses. So we got our total operating expenses, okay, coming in at, we'll call that 440 in terms of operating expenses. Last year we're sitting at 330. So you'd expect when you're growing revenue this quickly, you're growing gross profit this quickly, you're going to grow operating expenses, but they didn't grow that much. You look, sales and marketing up, yeah, a little bit. Research development up, yeah, a little bit. General administrative up a little bit, but it's not nearly the type of jump that you're seeing up here. This company is starting to scale up and scale up very, very nicely. So you take this 558. So you made 988 on the top line. You minus off your cost of those revenues, you get to 558 in gross profit. Now you minus off this 439 in terms of operating expenses. That gets us an income from operations hitting at $118 million. This company is now profitable from an operating perspective, not just a gross profit perspective, which they were last quarter or last year. Now they're profitable from an income from operations because last year, you see, they lost $73 million. They basically hit a tipping point. If they can continue these types of cost structure, this type of margin, gross margin, this company is going to continue to be popular because that's just kind of the nature of the business that they're in. Now, they had some other income here coming in at $1.2 billion. I think they did a fundraising round or something like that, and they're counting that on the income side. So they get this massive net income number of $1.2 billion. You look at earnings per share at $10. They were at 27 cents. I think investors are somewhat ignoring that. Maybe not. Maybe the computer algorithms are kind of seeing this gigantic $9 EPS diluted. And when last year they lost 27 cents, that's going to look really good to a computer. But when you come in here and dissect the numbers, this $1.2 billion. So what I would do is really look at Shopify from this income from operation and gross profit perspective. Okay, what is next quarter going to look like? What is next year going to look like? If you think they're going to continue this type of growth, well, tell you what, the stock's probably undervalued, to be honest with you. You also see here, they are diluting you a little bit. They had 116 million shares. Now they got 126 million. So they're continuing to bolt on shares as they kind of short the balance sheet and kind of fundraise for different kind of expansion efforts they've got going on here at Shopify. So we've got our balance sheet here. This is the beginning of the year, December, and then we've got up until the current quarter right at the end of March. So we've got cash and cash equivalents and marketable securities, basically both cash. We got 7.7 billion. Last year we had 6 and some change on the cash side. So they bolted on some cash. We'll look in the cash flows where that came from. In terms of total current assets, you're sitting at right about $8.4 billion. You see total assets here at $10.8 billion. You got to love these tech companies. I tell you what, they got $10.8 billion in total assets. Over 7.8 of that, 3/4 of that, or actually more than 3/4 of that, is actually sitting in cash. You love these tech companies, and people often say, well, tech's overvalued. Tech's gone up too much, too fast. Well, you look at this balance sheet, you look at the gross profit, you look at the income. Guys, there's a reason for it, honestly, okay? And now here we come down to liabilities. Not much here, okay? Total liabilities coming in at $1.18 billion. Okay, go look at an airline. Go look at an oil and gas company. These companies, their balance sheets are a mess. This company has more sitting in cash than they do total liabilities. Okay, just a beautiful spot to be if you're a company, and certainly Shopify is there. Now, moving on to cash flows, take a look at what's going on here. So we got this unrealized gain on this equity investment, so we get to take that out because, like I said, they printed this gigantic net income number at $1.2 billion. Okay, last year they lost $31 million on the net income side. Cash flows gives you a little bit better idea of this because we're going to take this away. We're going to add back in stock-based compensation, add back in some depreciation, some deferred income tax, I guess. I don't know. I guess you can't really defer income taxes, but that's what they're doing here on the cash flow statement. So we've got this next cash provided by these operating activities. We were at minus $85 million. So they burned through $85 million in a quarter last year. This year printed $135 million. I think if you want to factor in these income taxes, okay, you can add, who can't pay income taxes, okay, especially when you're making money like Shopify is now. Well, you're sitting at about $35 million in terms of, cash from operations when you factor in tax. Whether or not you want to analyze the business like that, I'll let you decide. Now, we've got our investing activities. They're doing some purchases, the maturity of these marketable securities. All in all, they spent about $1.6 billion here, but it's basically just moving money from one account to another. That's basically what I see going on here. Now, financing activities says something completely different. So we've got this proceeds from public equity offering, net of issuance costs. So this is where I believe probably this $1.2 billion came from, is you got it $1.5 billion. They had to pay some fees and things like that. And that's where mainly that money came from. You see here, they got a positive $1.5 billion by selling the stock. And so that is Shopify's cash flows. Everything looking very strong. Now, when we get over to the stock chart, we see this one's gapped up a little bit, but we still haven't really reached the areas where we were at just, at the end of December. And then we made this big, gigantic move in early February as well. So what I see here is this stock is just kind of channeling along. Now, this moving average is starting to flatten out a little bit, but when you factor in today's move and if it can continue up, well, this moving average is just going to continue upwards. So So would I buy inside this channel? I guess it depends on your long-term outlook on Shopify. That's what I would think about too. But basically, we're in this channel. You come down here, you touch the lower box of this channel. You could draw these lines in a little bit more accurate. I just kind of wanted to show you this just from a broader perspective of where Shopify is, at least from a chart perspective. It looks like to me, it's in this channel. It's probably going to continue just to churn upwards. And so, broadly, I really like Shopify. I know sometimes it gets pinned against Amazon. It's like Amazon versus Shopify. I want to encourage you guys out there not to look at stocks like it's rooting for the Lakers or the Celtics or the Dodgers or the Giants or the Red Sox or the Yankees or Republican versus Democrat. I know a lot of society, sports, politics, stuff like that wants to pin you one side against the other. Okay, it's not that way in the stock market. Okay, Shopify, in my opinion, is complementary to Amazon. Can they work together? Yes. A lot of sellers like myself, I have a Shopify. I have an Amazon store. I do a lot more merchandise value through Amazon, but Shopify is an important part of my business as well. They can work in tandem. And I think Shopify has some levers of growth that it can continue to pull moving forward. Whether or not they're able to execute on that, we'll see. But they certainly have now the financial position in terms of not only balance sheet, but gross profit and operating income to start to pull some levers in their business that could create more growth going forward. So that was Shopify. Hopefully you guys enjoyed this video. Good luck with your investments.